The recent government shutdown has now become the second longest in history, and it doesn't appear that it's ending anytime soon. President Trump has reportedly told Democratic lawmakers he has no plans to meet with them until this shutdown is over. Essential government services that protect human life or property continue to work, but many are working without pay. The shutdown has also caused about 750,000 federal workers to be furloughed, and it's now threatening the SNAP, or Supplemental Nutrition Assistance Program, that 42 million Americans rely on. Officials are saying there won't be enough funding to pay for all of the November benefits. Joining us now to discuss this impact is financial expert Stephen Esposito with Yellowstone Wealth Management. Thanks for joining us, Stephen. Good to see you.
Thank you. Thanks for having me.
Okay, so let's start with what we've seen so far with the financial markets, not only with the shutdown, but with the tariffs, all encompassing. What kind of impact is this having?
Actually, in terms of the financial markets, it's had actually very little. Initially, the markets were concerned, obviously, and as you see today, we're hitting new highs in the market. We have been hitting new highs. So the market's going to be shaking it off at this point right now. We'll see going forward. But right now, it's really not affecting the markets at all.
Okay, so let's talk about consumers, because that's where it hits the most, right? We've heard about air traffic controllers. They're working without pay. There's supposed to be slowdowns at airports. Are we seeing an impact with prices on anything, including, loss of labor? A lot of people now not working. Where is the consumer feeling the effects of this government shutdown?
Interestingly enough, as they do surveys, the consumer is resiliently strong. That's come across some CEOs we've talked to of corporations, even surprising them how resilient they are. They're seeing their 401ks and their portfolios hitting new highs in the market. So that's giving them, I think, a lot of confidence going forward. So we're not really seeing an impact, at least not now, to the consumer. We're hearing worries and concerns what might happen, but right now, not so much. And on the commodity side, on pricing, we're seeing commodities dropping. Look at energy. Energy's way down near the lowest level we've seen really the beginning of the pandemic. It's $61 a barrel, something like that. We're just below 60. So you're seeing it cheaper there. You're seeing various commodity prices coming down across the board. So ironically, consumers doing pretty well considering what's going on.
Well, and it appears, as I said, it's not going to end any time soon. How long before you think we start feeling it, everybody?
I don't know. There's usually a 6 to 9 month lag and things like that where you start to see it come through. We haven't seen it yet. We'll find out come holiday season. We're almost there. If we see an effect on that whatsoever, I mean, the tariffs we were told about haven't really had a big impact on pricing and inflation. You're not seeing it there either. So I'm not really sure. I'm hoping we can get through the holiday season and go into the new year without any impact. And we'll just have to take it one day at a time and do it accordingly.
And hope this will end sooner than we all expect. Okay, let's talk about student loan debt. So some good news this morning for a lot of student loan borrowers. The Trump administration has agreed to forgive some student loan debt. This is supposed to impact about 2.5 million borrowers. Tell us who they are and why all of a sudden are we seeing kind of a change in course?
I don't really know why, per se. I don't know if it's a legal situation. It's developing as we speak, so we're not really giving you all the details on what's going on there. But if it does, in fact, happen, what will the impact be? Obviously, if it relieves student debt and it puts less of a burden on those 2.5 million people, that's actually good for the economy. That'll have less concern for them, the ability to spend more money and consume. So that would have a positive impact going forward on the economy. So net, it would be a positive.
Yeah. Okay, Stephen Esposito with Yellowstone Wealth Management. Thanks for joining us.
Thank you for having me.